Hey Jack, how's it
Hey,
going?
how's it going there?
Sitting here stuffing pizza in my face as fast as I could.
Pizza?
Yeah, some pizza.
Nice. Hey, the market got soft all of a sudden, like everything.
Yeah, I mean, we were at all-time highs. What do you expect? A pullback?
Yeah, keep going, man. What do you mean pull back? You got to keep going higher.
Can't be up every day. Yeah.
Yes, and I see Oklo hit a new all-time high.
I was looking at that this morning. Like that's a beast from the April low up like 700 and something percent. I just, I mean,
New highs are one thing, but all-time highs, that's a whole nother animal. And I'm seeing that like just crazy across the board.
yeah, I mean, we're seeing new all-time highs like crazy. I mean, look at Oklo tagging that new high. I mean, just getting over the skis. That's the way I feel about it.
Yeah, it is. It's funny that I talked to a guy from Washington, D.C., close to the administration, and he asked me if I've ever heard of this stock. And he's not a stock market guy, right? So this is floating around. They really want to see nuclear be the unclog the bottleneck of energy in AI. So we may see some fast track approval or something. I don't know, but this thing, it's far from making a profit.
Yeah, I was bringing that up this morning. I was like, look at this. Look at the ridiculousness of this. It's worth $20 billion with a B, has 100 employees, 113. Big deal, 10% difference. $20 billion with no sales, no income, no contracts, no
No,
nothing except hopium, hypium, hope.
like my whole life, they talked about how the future expectations are priced into a company, and that's why it's too high. And then the company kind of grows into that valuation, although not ever as much. But this is an extraordinary case of, as you say, being out over its skis. It would take more than a miracle for this thing to be really valued at this price. And when we get a pullback or if we get a correction, this thing is going to get destroyed, as is every stock like this that has no earnings at all.
I mean, the fair price really is $10.
Yeah.
That was the that was the SPAC price. I mean,
Yeah.
quite literally, that's the fair price right here is what the people were willing to bring it to the market at. All this is froth
Yeah.
until they start actually having plants and
Yeah.
things and sales and I mean,
Now, see, this is a bubble. What would happen in AI if it came back would just be a normal correction, not like the dot com. This is more like the dot com, where it's all pure 100% speculation, zero money coming in, right? 100 employees.
I mean, we're set to spend $2.5 trillion on AI infrastructure in the next 12 months is what the projection I'm seeing versus the income over the same time period for AI things is projected to be about 20 billion. That math doesn't really work.
No. So the difference there, is that going to be borrowed money, or is that going to be cash coming out of
Yeah,
the
so there's some companies like Google is using money they're making off everything else. But some companies like Oracle are borrowing money to build this infrastructure on contracts that have yet to be funded or paid to them. So it's kind of this thing could blow apart. And is it one of those things where it's sell everything and then figure it out later? Or, at some point, we're going to have our day of reckoning. I just, I was given this analogy this morning, Jack. It's like, that the first frost is coming. You don't know what day that you're going to wake up and there's frost all over everything outside. You don't know what day it's going to be the first day you have to scrape your windshield. You know it's coming. You don't know which weather systems it's going to be. You don't know, but you know it's going to happen. It's
Yeah,
so
I feel a little frostier every day when I see a chart like this, on Oklo. That's
yeah.
what's going to happen. And I say that from experience, not just this is not my opinion. I don't know when it's going to happen either. Nobody does. It'll be a little bit of a black swan type event. But the first companies that the savages are going to go after, the bears, are going to be triple digit stocks riding on air. And we saw that in 2022. Snowflake, oh man, just on and on and on. Companies that had nothing going on, triple digit stock, crazy valuation. Those were the first to get their heads chopped off. This will be right there. This will probably lead the pack.
Yeah, Oklo, and then this one right behind it. I mean, sure, these guys have a little bit of, but they have 100 years of sales to justify their current price.
And what kind of revenue?
Yeah, the revenue is a pittance, it looks like. Let's see. Market cap, monthly, cash equivalent. I mean, basically they're just running on debt, but it's just crazy.
This
Looks
is
like their revenue was $8 million. SMR, new scale. Sierra Mike Romeo.
we traded this one a couple months ago when I was in Florida with my man Lance.
Yeah, annually they've made $37 million for an $11 billion company.
That doesn't make sense. Like you say, there's plumbing companies that make more than that, you know? Not that plumbing companies are not high revenue, but I mean, you could have a mom and pop business do that.
Yeah, that's small business type of money right there.
That's small business type of money. Yeah, Jim says Oklo has government contracts. That's for sure. Hey, Will. Hey, Steven.
They've got signed government contracts, but they've not brought any.
Doug.
They've not met any performance criteria to bring in that revenue.
No,
And
that's the thing is, I guess that's why this Washington insider um, was telling me about this. So we'll see. He
yeah,
might be on
they
the
have.
show. So he might be on the show. So I don't want to mention his name, but I got a lot out of him. Yes, Lynn, I am still in Colorado. I'm leaving Monday uh, to go back to Florida. But hey, before I forget, mark your calendars for Sunday because my good man here is about to blow your mind, right?
Yeah, we got a big event coming up. I'm going to throw that link in the chat.
Wee. I thought I saw a lot of cool stuff, but and I've only had a tiny glimpse, but yeah, mark it down for Sunday. Sunday is a rare day, uh, and a
Yeah,
great.
I don't usually like to work on Sunday, but
I
this
hate
is
to work on
so
Sunday.
special.
Yeah, this is special. This is very special.
And let me just show up a couple things, just a teaser. Look at this. Here's the
Yeah,
win rate.
they have contracts, government. Yeah, I know.
Here's the win rate, and if you risked $1,000 on every one of these trades, that's the kind of money you could be sitting on year to date. Just 1,000.
I know.
No compounding, no
Well,
nothing, just $1,000 every trade.
and this dog can hunt. You don't have to do anything, right? The dog goes out, it hunts, it brings it back.
Yeah, and it's a fit take you fishing type of trade. I'm not trying to teach you how to find them or anything like that. It's just a system I set up that just goes and finds high probability trades.
Giving
It
them
actually puts the whole darn thing out for you. In fact, let me show you the today's alert, Jack, right here. This came out first thing this morning, right here. It said sell this option, sell the 608 QQQ put, collect about $1.60, buy the this is for tomorrow, the 607 put right there for about $1.28, get approximately a net credit of 32 cents.
wow.
Now I recommend plus or minus 5 cents. Since this is 2 hours later, this trade may not be good to get into. Plus or minus 5 cents. We're going to close for a 50% profit target always. That's shown the high probability to amp that. We were talking about the Tesla trade yesterday. Your green light system to up the win rate. Well, and then also closing for the 50% profit target. This one also goes after our 50% profit target right here, 50% of the credit. So the net risk on the trade is 68 cents per contract. If you want to put $1,000 risk on it, that's 14 contracts. This thing just does all the calculations for you right there. Tells you what to sell, tells you what to buy, tells you how much credit to get, when to close it, your risk on the trade, and how many contracts to do, all in one alert. Is there a closing alert? No, you just put this on and let it cook.
All right, buddy, take it away before you get me too excited. You
we're
visit
gonna
this,
show we're gonna show more of that on Sunday. So make sure you hit that registration link I threw in the chat there if you want to come.
Sunday's going to be such a perfect day to unveil this because then they can put it to work on Monday.
Exactly. Exactly.
Now, we see people saying there's government contracts with Oklo and SMR, but it's a long way off. And even those contracts, I don't know how big they are, but they would have to be a lot.
Where's the tell me, Jack, where's the contract?
I don't see it.
I see
That's
zero revenue.
every time I've signed a contract, an options contract, whether I bought or I sold it, revenue change, money change hands. Yeah, there's nothing there. So that's a dangerous situation here. I'm just saying, when we get this correction, which we're going to get it, the frost is coming. They're going to come after the bear's going to come after this thing and eat.
This is one of those things. Like, if you're believing the news that there's contracts, or you actually looking at the numbers that the company's putting out, the numbers the company's putting out say there's no income. There's nothing.
So
that's
did,
dangerous.
Is this a SPAC deal?
Yeah.
Are they sitting on some cash because they got to have a burn rate every month? They're burning it up. So when they did the SPAC, there must have been some cash in it.
And that was the deal. Like that's what they're sitting on is burning. That's why when you look at their earnings, they're actually, burning through cash.
Yeah. So they got 54 million in the company or something like that, I thought I saw. And then they have a burn rate of X million per month.
Yeah, let's see what we got here.
Cash
Revenue, earnings.
Now, I'm not an accountant, folks, but it doesn't take you can flunk ninth grade math like I did and still see that this don't add up.
Yeah, even the forecasted revenue is nothing. Like
So,
there's nothing
somebody's
out here.
got to have a burn rate out there on a research report on what they're spending per month, and you could see how long is that 54 million going to last them, or whatever.
Yeah.
There's 51 million,
and they're selling more shares. Look at that. They keep selling more shares.
So there's a double whammy right there against you. So when they issue more shares, we were talking about this with dividend stocks. That's actually diluting your equity in the company. So, right, if they keep issuing more and more shares, whereas if they were buying back shares, your equity in the company would be going up because there's less shares outstanding. So this is a double whammy to the downside. This thing looks I rarely short stocks in a bull market, but I'm going to take a hard, cold look at this when we get done today.
I'm going to wait till a crack shows up and then pound the dirt out of this probably.
That's the best way to do it is, wait for it to start going down and then slam it.
Yeah, I just, operating cash flow per share, and it keeps climbing even though there's more shares. That's a scary.
Wonder who's lending these, if anybody is lending these guys money.
Yeah, somebody's buying the shares, and free cash flow per share keeps climbing.
Oklo.
This is I'm not saying you can't make money on the upside, but this is a scary thing to me right here.
Let me take a look at that. Yeah, that's crazy.
This the number one mover today was this one right here. It's a biotech. A friend of mine yesterday lost $1 million on this stock.
How?
He was shorting it, shorting a garbage company that made no money. So things can be crazy.
I got to tell you a lesson to tell your friend. This is like, man, what was that? GameStop. Okay,
Yeah.
so everybody and their brother shorted GameStop, and when it got down to around $4, there was no more meat on the bone. So it sets itself up for the massivest short squeeze ever, which is what happened with GameStop. And this is the same thing, right? There is no sense in being short a stock that has very little more downside. In fact, I only like to short triple digit stocks. I would
Wait,
never. And if I was short, I would cover this thing. If I shorted it at 18 and it went down, like that's like how much more? That's just being greedy.
he shorted it here on the pop yesterday, but the problem was the pop got crazier.
Wow. So it wasn't like, yeah, he got short squeezed. He shorted it. Boy, that's a
He
risk.
shorted it here in the 30-40 area, and then it popped into the hundreds. He
Was
said
there
it
a
from
short squeeze going on, or was there news, or what?
yeah, this was so they had a little FDA announcement that the FDA was going to fast track a review of their new drug. Not approve it, not anything, just fast track the review. And that's the only news I know of on this thing. It's just absolute crazy. Like that's yeah, he told me he's like I had stops right here and I just ignored them when we gapped up on the restart when it's it shut down and then it restarted. He's like instead of stopping out, I decided to be the hero and then I got forced closed
Oh, he got
and
post.
yep.
Because I
He
was
went
going to say his other choice would be what they call finance your short. That's where you would sell more at a higher price and raise your average cost, but that's very expensive. And at some point, if you can't afford to do that, then you get really killed. You're out of the game entirely.
and that's a rough game right there. Trading can be dangerous. You can lose money. Just in case anybody doesn't know, all trading involves a substantial risk of loss, and past performance not necessarily indicative of future results. We're trying to be informational, educational, fun, and entertaining, but we're not recommending you buy or sell anything out there. You might lose money. If you need somebody to tell you what buttons to push, hire and consult a financial advisor. So anyway, that's a rough one though. Like, I
Now,
mean,
why did he do that, do you think? Why did he do it just because it popped up, or did he?
oh, he goes after this stuff. Like these happen every day. Typically, usually 99.9% of the time, once it does this double top thing, it comes right back down.
That's
This
why.
one, this one did a different thing. And he had, like I said, he had a stop alert drawn on his chart. He just chose to ignore it when it restarted here. And the bad got really bad. And he went from having he said it was 3 seconds. He went from having almost $2 million in buying power in his account to being negative buying power and the broker liquidating everything in 3 seconds.
They must have
So
had their eye on that, you know. They've got all these new features to look at potential damaging broker accounts that they're sitting on, customer accounts. You see
so
red
that
flags everywhere.
yeah, that just went crazy all of a sudden. So and then it's still being crazy today. Like talking about being able to short something. That's $200 right here today.
It
And it's probably coming back down.
that's already when everybody's been burnt out. Like he probably won't touch it again.
Yeah. I mean, that's he's got to recover a little bit, he was like that was like 18 months worth of gains for me, so that was a big hit.
Yeah, that's a big hit. Never invest, trade more than you can afford to lose. And
And
try
he
not
said he'll be fine. He was like, I got accounts I can refund. It's no big deal, but but it does hit my ego, and So
so
anyway,
that's a rough trade. Yeah, I don't think it's worth taking risk like that, people. I think you can, the stock market, as I say, is willing to make you as wealthy as you want to be, but you don't have to try to go for home runs. Let me share the screen. I got
yeah.
some, Jeffrey.
I was just showing, I'm just showing off of my account real quick.
Oh,
Just small, consistent gains over and over. Everybody says you can't make money on the shares. Like I hear this so much, Jack, that you got to play long options because you can't make money on shares. This right here, that was shares. These are all the options. I'm actually short options for the most part, but these are all options trades, and that was shares right there.
You saw mine. I shared my account the other day. Share price appreciation is, it is what it is. Uh, but I want to show you this one I did today.
Yeah.
You see that there?
See, what's the ticker on that one?
TSLL.
Oh, it's one of my favorites.
I did this morning. The stock, this is off the premium income calculator where I've done it on margin, but you could still do it on cash. It pays 11.11%. So this is my trick or treat trade. I'm calling it TSLL. I sold, the stock was trading at $21.20 today. I sold the 20 strike price put that expires October 31st. I got 2 clams for doing that,
Nice.
doing it on margin. 20% of the stock, you only have to put up $504 to do that trade on margin. And you make $200 because you're getting that premium from that put instantly. So that puts the profit at 39.7%. At 220, if you can get 220 for that put, that would have been 42%. But listen, if you do 39% in a month, like or less, right? You do that times 12, you don't need to short stocks like the guy did and risk losing 1 million. You could make 300% doing this, right? Now, if I get this stock, what am I going to do? I'm going to turn around and sell calls. And I wouldn't mind getting this thing. But that's my trick or treat trade. And I like making 40% in a month.
Yeah. I mean, that's think about that. You could do that one trade and then sit out the rest of the year.
Yeah. Tell people that if it was big enough, I would, but I didn't, I
Yeah,
would, take.
that's the thing, with these high return trades comes high risk.
Mhm.
So on the flip side, you should dial in the risk. Don't risk big amounts on this one idea right here. Even though it looks so juicy, you're like, oh man, I'd love a 40% return on my whole account. You can blow out your account too. The risk is TSLL takes a big dive. I
Yeah.
mean, if Tesla pulled back 50%, TSLL is a 2x leverage on Tesla. That would
Gone.
be potential liquidation, 100% potential loss. So
So
be careful.
when I do an options trade, like if I were to buy and this is really something everybody should know is that and follow is that the higher the risk in the trade, the less capital you allocate to that trade. It's like a risk pyramid. The most money you have down here, maybe it's in T-bill or whatever we talk about. The next level of the pyramid with more risk would be stocks you're buying and holding like dividend stocks and then different strategies all the way up. And at the tippy top of that pyramid is buying calls or buying puts, which is why that would be like 1% of your capital you would allocate to a trade at the top, right? So, I'm probably 5% I could do on a trade like this, but no more than that. Even though the yield is high, I wouldn't go more than, 3 to 5% of your capital on a trade like this.
Yeah, it's kind of a gravy trade, is what I call it. You're getting there's a lot of gravy, a lot of juice in there, but at the same time, you got to keep it in check that you don't let this thing ruin you. Like if this thing goes to zero, you're still gonna be okay, right, Jack?
Oh yeah, be fine. I'll make it up.
Yeah, you're not gonna lose the seven figures on this one.
No, I wouldn't do that to myself. I took a big loss. I think I told you when I was running my hedge fund, and I was short, and I carried the short, and I couldn't sleep, man. I was a wreck, and I just thought, however much money I thought I would have made on that if I did make it, wasn't worth the emotional trauma that I had to swallow. So I don't do that anymore. I keep it all good where I'm good either way.
Did I tell you about my my foray into trading options in a big way?
No, maybe
So
you can. I love a good story.
yeah, so if this was gosh, I was still relatively new at options. I learned to do covered calls and stuff, but I got hooked on the allure of fast money, like so many traders do. And well, the people I just happened to find were doing what's called a back spread.
Mhm.
All right. That's where you sell one at the money that's expensive, go a few strikes out of the money, and buy two. Yeah, and it potentially you get in it for a credit or a very small debit. Almost no cost to your account. Great for a small account. Super great for a small account as far as the capital used to do this trade. You're selling one at the money, buying two out of the money, and what you need to do is you need to have price kind of blow into your two long options to really make some money. Otherwise, you just make a small profit. But if it ends up right in between your short and your long, you can get monkey hammered. I mean, it could just be pretty devastating.
Which is likely to
And
happen, when you
yeah, which
set.
is likely to happen because you're playing close to the money.
Yep.
And so on Friday afternoon, I was doing one of these. They work really really good on expiration day, especially right near the end of the day. And something happened, and I couldn't close the position. And my little $5,000 account, I was like, they were telling me like, no big deal, so, just let it work itself out. I come in on Monday morning to a $2 million short in Apple stock. I had $2 million worth of shares short in my account, my little
Oh,
$5,000 account, with a margin call and all the things that go with that. And I was a little bit freaking out. And you know what? The guru, nowhere to be found, not online, no customer support would answer, no nothing, no chat, no nothing to, get help. But luckily I was swooped enough to back myself back out of the account, buy the shares back. I had uh I was $2 million short of Apple stock, but I had $2 million in my account, but I also had a $2 million margin call. So I mean, it's like you know, what do you do? And I closed it out. I actually think I made $100, which is on the trade when I closed it out because Apple did it dropped just slightly, I guess. But short $2 million. I mean yeah, that's kind of like that Robin Hood story back during COVID where the kid killed himself because he got in the same situation. I knew exactly. It sounded exactly like what happened to me, and you just got to be patient and stay disciplined and just back yourself back out of the trade. And if you don't know how to do it, call the broker. They'll help you get out of the trade. Usually it's not that big a deal, but my collateral had all gone away because the options expired. So basically I was just sitting there naked, short $2 million worth of Apple stock. And the broker didn't like that.
how'd you work it out?
Yeah, I just bought the shares back. I mean, that's literally what I did. I just, I don't remember how many shares it was. I think at the time, Apple, this is going to be like a split or two ago, probably somewhere around 2009, 2010 when things were crazy. Uh, and so that's probably $2 million in Apple. That was probably like 1,500 shares, I'm going to say, that I had to buy back. It wasn't even a giant trade, but it's pretty crazy.
Yeah, that is crazy. That yeah, man, and that hurts too. It kind of rattles your brain for a while.
Well, it's stuck with me all these years. Like I don't do back spreads anymore.
Yeah, that's how you learn. You um, Sometimes you gotta learn the hard way. There's the only way I ever learn anything is the hard way. So um,
Yeah, I tell people, you can go get schooling, but you end up paying for all your education, one way or another. Usually in the school of hard knocks.
that is definitely true. Definitely true. Yeah.
Well, what
What?
else we got here, Jack?
Yeah, I like that TSLL. I like Tesla. What else do I got going on? Uh,
Anything else you want to share, or you want me to take back
no,
over?
no, take it back. Take it back over. I was just showing people that how profitable and juicy these naked puts can be. Now
Yeah,
on
you got the
cash basis, that's 11.11 on margin 38, 39%.
and TSLO has a little dip right here, so possibly you could pick it up a little juicier than what Jack got right here.
Yeah, you could.
Possibly. I'm gonna log back into my broker platform so I can pull that up. and show people exactly how this trade would work. What do you say?
Yeah, do it.
So Jack is out to Halloween,
My trick or treat trade.
and what he did, all you do, this is very simple for this trade. You do have to have, since we're doing the 20 strike put, you do have to have $2,000 of cash, or if you're on margin, like Jack was talking about, 20% of that, which is 500 bucks. If you have that kind of account, we're looking at bringing in 222 bucks right now for selling this put on TSLL. What's the worst that could happen? Well, at this moment in time, you could lose 1,780 and 78 bucks. Why 1,788? Because 20 bucks, which is 2,000 bucks, minus the credit you could potentially take in, 222 bucks, 223 bucks. That gives you your ultimate potential loss if this went to zero. Now, it's unlikely to go to zero, but it is possible to go to zero. So just know that going into this kind of trade. And that's why Jack said no more than 5% of your account to this type of trade right here. And for me, it'd be probably, I've been hammering Tesla a little harder, but I've also been playing a little further out of the money. But
Yeah,
right now it's come back down, and I've got 19s, 20s, and 21s
yeah, I like
for
it. And
for
my
this Friday.
reasoning behind it is just a short-term move on the underlying Tesla. I think that's going to happen. Um,
There's some sort of announcement they're supposed to announce today. Like I haven't kept up with it yet to see what's going on, but they're supposed to announce something today. Speculation is it might be they're gonna start selling their custom-made AI chips to other people. Maybe we'll
a lot
see.
of people, a lot of people want to get into their own chip. I'm noticing. They want to make it or have, they design it and have it made. I don't think there's a spread you can do here on TSLL, Terry. If that's what you're asking, can you do a spread on TSLL? I don't see it.
Yeah, I'm not sure why you want to. The premium's so high
Yeah,
on
this is
all the
where the
other.
action's at. This is the best move. To spread it, you would not, you'd either be in a debit spread where you'd be paying to get into the trade. I prefer to get paid to get into the trade, or you do straight up call.
Now this one's not going to move nearly as big as Tesla. Like you have to think about it. Like if Tesla does a 1%, 2%, yesterday 4% move, that's only 8% on this stock. But 8% on this stock at $20 is just pennies. It's not dollars. So
And I don't, the irony of this is I don't need it to go up. I just need
right.
it to, it doesn't have
Just
to
just
run.
chill. Just
Just
chill out.
stay right here. See, this is why I think that these naked puts, if you're a businessman and you look at it, this is just such a great proposition. A, I got paid up front. That to me is the best thing in the world. B, I don't need the stock to go up, right? If I, in other naked puts, I could let it go up, down. It could even go down, you know, 5, 10%. So you got that going for you. And then, like I say, it could go up, down, or sideways from here. And then the fourth thing, if I do get the stock gifted to me, I'll turn around and either sell it or sell calls against it. But this is a short-term play just based on the underlying. And
I
my
have
goal here is to have the option on Halloween. If it expires worthless, then I keep 100% of my 39%.
now I have this Friday sold. That's what's showing up on the screen right here. I I have 3 short 20s for this Friday. And everybody's like, "Well, why don't you play out longer?" Well, just look at next week. Next week, same 20 strike, 12. That's not double, but it'll be more than double in another day or two when this erodes on down, probably Friday. When this premium erodes on down to like 20 cents, 10 cents, then I'll be able to go out the next week and roll this forward and collect another 80, 90, maybe a dollar rolling forward. And then come next Friday, when this is back down in the pennies, I can do it again. So collecting a dollar a week, I've got 1 week, 2 weeks, 3 weeks. I could be collecting $3 or so and then count this week too. Whereas Jack, taking the easier route, you're going to be traveling down to Florida, don't want to worry about it too much. You just collect all your money up front and
All
wait
up
for the spooks to come.
fireworks. Now, here's a good question that James asks. He's saying, so Jack, on TSLL, you said you would take the shares at 20 if you were gifted the shares. So my actual cost, though, first of all, James, if I had the shares gifted to me at 20, my cost would be 18 because I got $2 to sell the put. And if the shares go to 15 and I try to write calls against it, I probably wouldn't be able to sell a call to get back to the break even number. Now, I couldn't probably sell one call to get back to the break even number. That means I'd have to get like $3 to $5, $4, or $3,
It depends on where we end up, but
But the point is if I take the shares and they go to 15, I could put the red hat on it, as I call it, that Jeffrey did, where you just write calls against it higher than the market price, but you don't need to get break even on selling one call, right? It might take me 3 weeks to a month, 2 months, but as long as I keep selling calls against it, I'll work my way out. Now, we had the exact same situation James is talking about with Google. When we started the Google cash generation blueprint, Google split from 2,800 or whatever to 116. And it went all the way down to 88. And we were selling covered calls against it the whole time. And everybody made money, even though it went 116 to 88. Now it's back higher. No one lost any money down there because we were selling calls 10% higher than the market price. And the only time we'd have to buy that call back is if it was at a strike that was below our cost basis. So if I took them in at 15, I could sell calls against that, you know, for as long as it was around.
And look how juicy this is.
But you
All the
don't
way
have to
out.
put it all back on one call. If I if I get naked put, I get assigned, I don't have to sell a call to get it all back in that, break even on selling one call. I could take my time, do it over and over and over, like the red hat treatment.
Yeah, look, I mean, 10 days out, there's not a ton of premium, but going out a month or so, 31 days, there gets to be some pretty good premium. And, if you're like, well, what if I got put at 20 and I'm down to 18 and TSLL is down at 18? Well, look, I mean, just pretend like that orange line is the 18, like $1 higher, 257, $2 higher, 223, $3 higher, $1.85 for 1 month out.
Yeah.
So
James, I hope you're getting this. We're not bashing the ideas. We're just trying to show everybody how to reframe it and look at it a different way so you can get the biggest bang for your buck.
yeah, you want to have an idea like if it dropped to 15, how high could you be able to go up and get premium, right? So you just pretend like that's the line right there. That's 15. So dollar higher is 16, dollar higher is 17, dollar higher is 18. Well, if at 18, you could collect almost $2 premium for going out a month. And that would bring your cost from 18 down to 16. Well, now it's looking a lot better, right?
But a lot better. Give Rabbit the time, he'll get the answer. All you need is a
So,
little time to keep selling those calls.
and that's how, like, this is the easy way. Instead of going to mess with some website that has some kind of calculator, the option chain has everything you need to kind of visualize this.
Once you learn how to read that option chain, it all becomes clear. And a lot of people don't know what they're looking at, but I look at it and I look at how much can I get paid because they're willing to pay all day long. They're saying this is what we'll pay for this transaction.
Yeah, these are all numbers of if you take the obligation on to buy or sell these shares, this is what we're going to pay you. That's what these numbers mean.
Dennis asks, why is the premium so rich for a stock so small? Now, the stock isn't really small. I want to tell you an interesting fact about that. But the premium on any stock is going to be rich because of its beta and volatility. And in this case, since it's a leveraged fund. It's 2 times, right? They got calls going with it. So that's going to
So you
really
got
data.
you got the beta on Tesla, which is 1.8 basically. But then we take that
That's
and look at the TSLL, and the beta jumps up to 3.6.
That's why. Now, the other thing is it's not a small stock. I got to tell you a little thing I noticed today. The volume on TSLL, my friend, is twice what it is on TSLA.
Yeah, look at that. The volume is
When I put that
100 and,
on, yeah,
150 million shares a day
yeah, it was doing twice
versus
what Tesla was doing.
here's the 30-day volume on Tesla, 92 million
Yeah.
over the last 30 days.
Now, again, this is how Jack looks at it. You're looking at it through the Jack lens, right? I'm looking at volume, open interest, volatility, beta. We're showing you guys how to look at this stuff and get the best deal you can get, how traders look at it. That's how I look at it. This is amazing volume. So what's going
Assets under management,
yeah,
almost $8 billion.
wild dude.
That's a big ETF right there. This is rivaling some of the biggest stuff right
It
here.
is. Now, when I put in there for sale, I'm using Schwab and I love it. I'm putting them in for sale at the market a lot of times, and I'm getting way over the bid. But the options get filled so fast on this thing. By the time you even click on order status, it's been filled. It's just blazing fast.
Uh, I heard an interesting statistic yesterday on this one. This is now BlackRock's most profitable ETF to manage
Mhm. Let's
right
go.
here.
Dennis had a question about 2 times. That
Yeah.
means a 1 time is it moves tick for tick. It's a spot ETF. 2 times means they have the stock, for example, and calls. So it's going to move twice as much as TSLA. TSLL will move twice as much as TSLA. On the downside, too, right? So if Tesla goes down 50%, this thing's going to zero.
So if Tesla makes a 1% move, TSLL makes a 2% move. And it's not guaranteed. It's just their target. And
Yeah.
it's based on daily move, not on if Tesla moves 10% this week, TSLL might or might not move 20%. All right. It may underperform, it may outperform. Their target is for every day.
Got to go back to my man James here. I want to get him on the train. He says, I totally get what you're saying, but if you take TSLL and it goes to 15 and you write a call at 16 and the stock bounces back to 18 and it gets called away at 16, I end up losing money on it. That is 100% true. However, James, I would never let the stock go over my strike. This is when I say I would buy it back because I don't want to get called out at a strike price that's below my cost. So I'd buy that call back at 16. I'd take a loss doing it if the stock was moving to 18. And then I'd roll it out. I'd pick a higher strike over 18 and throw it out there further out in time.
That's why I said 15's here, 16, 17, 18. You would be at your original cost basis selling more credit.
Does that make sense, James? I want you to get this.
Or you could go 19, collect $1.60, bring your cost down to 16.40, and then still have 19 upside. If you wanted to go at 20, $1.50. And you could be back at you wouldn't make any money on the shares. You got put at 20, you have the commitment to sell at 20, but you just brought your cost down another almost $1.50 from 18 to 16.50.
You're bringing in cash flow all the time. That's what I love about it. It's
And
hard.
that's out a month. That's just 1 month. So you could do it again next month, bring another $1.50 in. Do it the next month, bring another $1.50 in. And yes, you look at this, it's been down at 10, 11, 12. So
James says,
and
here's the scary part. I understand exactly what you're saying.
So
That's how it works, my friend. I'm glad you're following along. I want to get everybody up to speed.
yeah, and this you have to remember this is not a standalone stock. This has an underlying. This is a derivative stock. So this thing's not going to move on its own unless some kind of devastating decoupling event happens. This is the stock that I watch to make my decisions
Yes.
right here. And then I sit here, I'm like, all right, where's my upside target? The purple line. I come in here, I grab my measuring tool, I measure that right there. That's a 25% potential upside. You go put that on TSLL, you're like, well, that's a 50% potential move higher on TSLL. Now I like to round down a little bit and go for like 40% as my target.
Which
Why
is why
40?
TSLL you could put at around 40%.
You could go 40%. And that's only looking for a move up to like 28, 29 area right there. Instead of the 50%, which is a little bit higher up here at 30. But another thing you notice is that here was the all-time high, and Tesla's, the actual Tesla stock is squirming around right up here near the all-time high, not way down here. And that's because this pullback, you can think about it this way, a 50% pullback in something takes 100% upside to recover. So if Tesla's the underlying Tesla pulled back 20%, 25%, let's just make the math easy. If Tesla pulled back 25%, this is going to pull back 50% potentially. So it takes 100% to recover here. But on Tesla, since it only pulled back 25%, it doesn't take 100% move back up. Right?
Yep. And that's the other side of the sword, right?
And that causes these to underperform after a big pullback. They tend to underperform. And then if we get lots of pullbacks, eventually this one will have trouble making the scratch, getting higher, unless Tesla goes on a big run. But that's
And
the downside to these leverage tickers.
the other thing I could do, James, is if I get the stock put to me at 20 and my cost is 18 and it goes to 15 and I sell a couple calls and I can't get out, I'll just sell it, take the loss, right? I'll just get it. I'm not opposed to taking a loss on a trade either. So none of it's the end of the world. It's all going to be good until I ever had to book that realized loss, which I would do if I can't get out of it. But I'm predicating this thing on going higher. So if it goes against everything I'm doing, um, then I'll get out of it.
I loaded up on TSLL in this area right here for me.
Mhm.
I was chasing it right here because I was fairly confident based on my years of doing this that we were about to see a breakout and a run toward this 550, maybe 600. Those are my two high probability. Once we got the candle close above this 618 level right here, this high probability entry signal, 75% likely that Tesla's going to this 550 area.
And you know what else is strange is that it's not already there. It's not
Yeah.
already at an all-time high. No, I'm serious. You look at some of this like Oklo. I mean, you look at that stuff and you look at there's so many stuff. Even the broad markets are making all-time highs. It's kind of strange that Tesla is lagging.
Yeah.
So maybe the
Uh,
story shines light on this thing and it really takes a rip.
yeah, that's an opportunity for this thing to catch up and maybe even outperform,
Yeah.
possibly go up to the 800
Now,
up there.
of all the stocks out there, just guessing, why would this be not making an all-time high?
Let us know in the chat if you got a guess.
Yeah.
Yeah, let's make this interactive. Who's got a guess? Why? Repeat your question one more time for him, Jack, just to make sure everybody's
Question
got
is,
it.
of all the stocks out there that are making an all-time high, And there's tons of them. Even the broad market, SPY, DIA, QQQ, all-time high. Why, of all the stocks, is Tesla being one of the most traded stocks and options? Why is it not making an all-time high? Wow. You know what's crazy? Everybody is saying the exact same thing. It's Elon.
Yeah.
Okay, there you have it. I don't know if people loved Elon before, now they don't like him or what, but I hear that, man, with everybody is if he would have stayed out of politics, uh, he would have done way better. So yeah, everybody's got it right. Buying
He's
pressure.
polarizing. It's polarizing, to get into politics, and yeah, it's just
Ever thought
funny.
about getting into politics?
Me, no, I'm not. I don't have the face for politics.
Yes, you do. Look at some of these faces out there now.
I got the face for YouTube.
There you go. I wouldn't want to be in politics either. I got people that I want to be the mayor and stuff like that, but I don't want to do it myself. That's way too much work for me. I couldn't get any fishing in if I was a mayor.
I like to help people, Jack. I like to do what I'm doing right here and help people make money out of this chaos.
Right.
And if I was a politician, I'd just be I from what I've seen about politicians, they're not trying to help anybody.
No, so
So,
it's a nasty
yeah.
game too. I can't imagine having all that mudslinging thrown at me without breaking out into a fist fight at one of those debates. It gets nasty between the
Yeah.
politicians.
Or,
Yeah,
you
president too.
now technically you look at Tesla and we're just grinding at this breakout resistance here, winding it up like a coiled spring,
Exactly.
and then boop is likely what's going to happen.
Yeah. What's the short interest out here on Tesla?
Not very much. We kind of looked at that a couple weeks ago.
I
Let me
think
see if I can
as
pull
it
it up.
goes higher, the short interest will increase.
Now, what's funny is that Elon takes it very personally every time a report comes out about the short interest on the stock. So he has been taking it very personally and going after shorts. And I have a feeling that's why he bought $2.5 billion worth of his own shares
Yep.
right there and caused that it just kind of broke it loose a little bit.
Yeah. Well,
And I'm gonna bring up Ortex. Oh, it's right there. It's already popped up. Let's see, refresh. I like to look at Ortex because it'll give me live short data over just going to look at the published numbers. Some people are like, oh, the published is good enough. I like to look at the live data, see where we are. These guys track it live, and they're one of the best out there. So I do pay for access to this platform every year. Thank you for telling me how it all works. So we're looking at almost 3% short interest of the free float, valued at whew, $37 billion of short.
not bad. Yeah, it's got a
That's
lot going for it now. And I've never been a Tesla bull or a bear, but I think right now it's poised. It's lagging, and he knows that too. Elon wants to see the stock at all-time highs as well. So they
oh,
can.
that's they're coming up on a shareholder vote in November, and Elon's future compensation is going to be based on taking the company to multiple multiple $1 trillion of valuation, 10, 12, and he'll get $1 trillion of stock compensation if he does that. So it's it's a high motivation thing for him to perform and push the stock higher so that he can collect. So um,
Yeah,
good, bad, or ugly, I think if that goes through, that you're going to see the stock explode higher.
that's very much so. Hey, let's talk about exploding higher. Let's take a look at CRCL.
Yeah. Let me turn off my drawing tool here. Circle, just kind of humming here.
Got a nibble. What was a high today?
High today. Looks like it was 157.56.
Yeah, I thought so. And now it's at 146. There's some volatility in that sucker.
Yeah. Oh, I
Ah,
mean, but the candles look tiny though. Can we let's see what the ATR is on this thing. Let's see.
now we got to tell the good people what is an ATR.
Average.
True.
True. Right, there it is. So this is how much, averaged over the last several days, how much does this stock move? And it moves about just shy of $11 on average right now.
I like it.
So that's your volatility right there. And you look at it, it's coming in with a beta of 3.3 compared to the S&P.
I'm nibbling. I'm adding a little here. I'm adding a little there. And of course, I'm going to play the CRCA, but
Yeah.
I get some position in the actual stock.
Let's take a look at the shorts on here for Circle.
That would be stupid.
10%.
That's a bad move. Without having a clear picture of how the stock trades or what the story is, that's a bad move right there. I
It's
wouldn't
got
short.
100 it's got 100% utilization right now, which means all of the shares are either have an order to be placed on them or they're borrowed. 100% utilization. Now we can go up to 150, even close to 200% utilization, which is crazy. But market makers that trade shares play under a little bit different rules, and they have several days to come up with the shares.
Now, one way you can take your shares out of short sellers' hands if you hate short selling is don't hypothecate your shares at your brokerage firm. Because if you do that, then you're allowing the brokerage firm to lend them to a short seller because he's got to make good delivery on the stock. If he sells it short, he's got to deliver the stock, right? It's not like an option. You sell it short, you got to deliver that stock. So the brokerage firm will lend it to a short seller out of their customers' accounts if you hypothecate the stock. If you don't, then they can't use it to give to short sellers. Little tip there if you want to stick.
I like collecting the money that short sellers pay.
Yeah, yeah, it's good.
I've got some stuff that's popular for shorts, and especially like my Mara Holdings stock, MARA. People love to short this stock, and I love to collect the premium and get paid on this baby. So I have thousands of shares, and I let them be borrowed, and I collect. Right now it's only 0.8%, but it ramps up,
Ellen,
and
you
I get.
you would ask your broker. Sorry about that, Jeffrey. She's saying, how do you know if you have hypothecation or whatever? You would chat with your broker or give them a call. And James, as far as taking the 18 strike for $1.40 versus the 20 for $2, it's one's not really better than the other. Um, it's just a difference of how much risk you want to take on, but they're both good. You could take $1.40 on the 18 strike price TSLL put.
Yeah, look at that. The cost to borrow TSLL, 3% right there. So you're gonna earn an extra 3% on your shares that you're just
If
sitting
you
on.
hypothecate them and let short sellers have access to them. Yeah,
Yep.
that's make sure you're getting interest too on your cash in your broker. And the reason is I say this is Schwab's largest piece of the profit they have is one thing is not paying people anything on the cash that they have sitting in their account, whether that's from a settled trade or a deposit or anything. Uh, yeah, if you get no interest on that, that's their biggest profit center is the spread between what they're lending money out for margin and what they're paying you, which is nothing. So that's huge, huge, huge difference. You always want to get interest.
A lot of platforms that'll be called FPSL. That's what it's called when that allows short sellers to borrow your shares and you to get paid.
Yeah, Carol, that's a great trade right there that she's showing. All
Yeah,
right,
let's
you
see.
stay in there on this one.
Do what? Sorry.
I was looking at Carol's comment and I missed what you said there about this.
Oh, I was saying that the lingo, the abbreviations FP, Foxtrot, Papa, Sierra, Lima, FPSL, that flag shows up on two of my brokerage platforms for things that are being lent out to short sellers.
Yep.
So that's a broker lingo right there, or broker abbreviation for allowing your stuff to be lent out to short sellers, and you should be collecting interest if that happens.
So many ways to make money. It's not.
Yeah, and this is not insignificant. Let me before we switch over to something else here. Let me pull this
Not
up
at
in an
all.
account real quick, and I'll tell you how much money I've made this year lending out in a small $8,000 account. I just have a few shares of a few different things. Yeah, $8,200 account, and profit loss for the year. I have made let's see, like $12 in that account lending out stock this year.
No risk.
Just sitting on the stock, lending it out, and all time I've made almost 150 bucks in that account in the last 4 years lending out
Passive,
stock
passive income.
in a small $8,000 account. That's a pretty big chunk of money.
Well,
So
Dennis asks, if there's a lot of short interest, does that mean it's likely for stocks to rise? Not necessarily.
yeah,
A lot
some
of
some
times,
stuff is garbage and gets shorted because it's garbage.
garbage. Yeah, a lot of times they are right about it, and you see them make a fortune. Like Beyond Meat, uh, yeah,
Yeah,
lemonade.
Beyond Meat. Yeah, whoa, gosh, that's gonna go out of business.
Don't
Yeah,
short it
Beyond Meat.
in though, folks, because the juice is gone. There's no more meat on the bone. You got to cover your short if you're down here by now. There's nothing left.
Yeah, this was a short up here, and now we've beaten it into the dirt. Now the vultures are picking at it right now.
Yep. You watch this is going to be gone. And they
So
will try this again for a long time. And when they try it again, everyone's going to go, you remember Beyond Meat?
but there's a competitor that's held privately that's still doing pretty well, actually. The Impossible Meat
Yeah,
company. They're actually doing pretty good. And
it is possible.
but Beyond Meat is not doing too good.
No, nasty. It's all chemicals. When I read the thing where the guy was talking about how they put the chemicals on it to make it look like it was grilled on a
Yeah.
barbecue, it was dark stripes, and that was all chemical. You just like forget about it, man.
Yep. So you gotta be careful. I mean, some stuff is garbage. This stock that a friend of mine was trading, it's probably garbage. It's probably gonna come back down, but it might be a few days.
Should not watch it or even look at it. That's just going to rub salt in the wound if he was right. Well,
Oh, he's gonna be right. Like, it's coming back down. This is not, I mean, it did a reverse split a month ago, which I've not yet seen a stock that does a reverse split that goes on to be successful. That's just not
why
what
they did
happens.
that is probably to stay listed.
Oh,
Uh,
absolutely. Absolutely. That's
a
why
lot
they
of
did it.
times, the capitalization has to be done like that, or NASDAQ or whoever exchange will kick them off. So that's a very bad sign as well. Uh, yeah, I don't like
I
that.
mean, to me, when I see a reverse split, and that's where you see one over some number, that's taking, in this case, it took every 75 shares that were out there and made one share out of it. So if you had 7,500 shares, now you have 100 shares. And then you've got 75 times the cost in those shares. And to me, every time I see this, it's a company that's bad at managing their stock price. Now, biotechs notoriously just burn cash. They're not in it to make a giant, to manage their stock price, really. They're in it to try to get a drug on the market and make it into a bunch of money. But a lot of times they burn tons of cash and have to reverse split to stay listed. And in general, things that reverse split just aren't great investment vehicles.
That's a tell. What you want out.
So, all right. So, interested in that cash buy program, make sure that you go register for our event on Sunday that we're going to be doing. We're not going to have it available before Sunday. So if you want to be among the first to get a piece of it, I'm trying to roll back up here and find the link I threw. It'd probably be faster just to type it in. There it is.
The fact that we're doing it on Sunday makes me so excited for Monday because then we could put it into action.
Right there you go, just in case nobody's signed up to be at our event on Sunday. But Jack and I are going to do a rare Sunday event and show this thing off right before Jack heads south for the winter.
Heading south for the winter on Monday. That'll be my last show in Colorado. Down there.
All right. So back to your favorite, maybe our favorite stock right here. I think we have Dakota. Is it going to play a replay of what we said yesterday about this? You ready, Dakota?
The hottest trade you can get coming up on this bad boy.
Jack has got a potential entry coming up on Thursday for this thing.
Yeah, plenty of
And
time.
Dakota's going to play the replay of what we. Oh,
Yeah, sure. That's
changed it up, and nobody told us, I guess.
yeah, that dog can hunt too. I use that just about every day. It's
All right, so let's talk about the cash flow agent, Jack. What do I need to know?
you need to know that this thing spoon feeds you great trades every single day the market's open. That's pretty much it.
All
Similar,
right.
to what you got coming up, but a little bit different. This is kind of like they've taken my trading strategy out of my head and programmed it into this cash flow agent. And now this thing just spoon feeds you the greatest trades
All right. How often do those trades come out?
every day,
Every day.
5 a day. Yep.
So, without further ado, Dakota, I guess we can start playing that one.
Right. Talk to you soon, my friend.